What if I told you it's possible to trade and retire with crypto tax-free? Zero capital gains. Well, you're in for a treat. Let's talk about crypto retirement accounts and how they can save you thousands of dollars. And at the end of this video, I'll even give you some recommendations and show you how to set this up step by step. We're going to cover two of the most popular types of IRAs, the traditional IRA and the Roth IRA. It's important to understand a few key similarities and differences between these retirement accounts. The most important similarity is trading. Trading within either a traditional or a Roth IRA is not a taxable event. This is huge. I can't stress this enough. In a regular account, any profitable trade you make is subject to capital gains tax. Short-term capital gains can be as high as 37%, meaning if you profited $1,000 on a trade, up to $370 can go to Uncle Sam. That same trade in a Roth retirement account has tax of $0. And that's why you need to watch through this video and ensure you understand the rules. The most important difference between these accounts is when and how you are taxed. This is important. Traditional IRAs are called tax deferred, which is just a fancy way of saying you don't pay income tax on funds added into the account. You only pay tax on earnings when you pull out in your retirement after age 59 and a half. These earnings are taxed as income at that time. The idea is if you defer your taxes to your old age, you'll pay a lower income tax rate because you're no longer in your prime earning years. On top of this, in some cases, your contributions to a traditional Roth are totally tax deductible, meaning you save on tax for helping out your future self. Roth IRAs, on the other hand, grow tax-free. This means you pay regular income tax on funds added to the account, but then you pay nothing when you pull funds out at retirement, again, after age 59 and a half. So let's say you added $1,000 to your Roth IRA and it grew to $10,000 at retirement. You would pay your regular income tax on that $1,000 now and $0 on the $9,000 in gains at retirement. This is what Peter Thiel did, and he now has $5 billion in one of these accounts tax-free. Work in the system. Now, the type of IRA that you choose really depends on two things. First, how much money you earn per year, and second, what you expect your tax to look like in retirement versus what they are today, meaning how much you expect to earn when you're in your retirement, because that changes your tax rate. Both types of IRA can contain several kinds of investments, but they must be funded with cash, or you can transfer one account from one brokerage to another. Now, the real strategy here is you can stack something on top of your traditional Roth or your Roth IRA, and that's called a self-directed IRA, or an SD IRA for abbreviation. This is where you as the investor have full control over how your assets are managed and when they're bought and sold, and this means that you can add crypto to your account. This also means that you won't have someone like Vanguard making investment decisions for you. Now, doing this can get a little bit risky, and it's not wise to put your entire retirement into crypto. I would never recommend that. Actually, none of this is financial advice, but it's always best to diversify with your life savings. You know, we can all agree on that. The way I look at these accounts is they are absolutely amazing if you already have your retirement investments squared away and you believe in crypto long term. You just want to sprinkle some crypto on top. Or if you're a trader, because there's no capital gains and you can make all the trades you want, no capital gains. If that's the case, it's really a no-brainer because you're just saving money. All right, now what you're here for. How the massive tax savings really work. Let's break this down. Anytime you sell your crypto assets, that's considered a taxable event if there's profit. If you bought and sold your crypto within the same year, your earnings, assuming that you profited, are taxed like ordinary income. This is short-term capital gains. And as you know, income is taxed using this progressive tax system. How much you pay in tax on your short-term crypto gains varies depending on your level of regular income. Conversely, if you sell your crypto over a year after you purchased it, these are taxed at long-term capital gains rates, which start at $0 for your first $41,675 in 2022. Once your proceeds go beyond that, you're taxed at either 15% or 20%. So you can escape crypto taxes provided that you don't sell over 40 grand of it from the previous year and they are in the long-term capital gains bracket. But if you're planning to use your crypto earnings to retire, your long-term positions could quickly go past those minimums. For example, if you held onto $10,000 in ADA and that grew to $100,000 in the time it takes you to retire, you'd have $90,000 in profit. If you wanted to sell all of that, you're paying Uncle Sam over $7,000 in tax on top of the income tax you paid on the original $10,000. And we can simply do better than this. This is where IRAs come in handy handy. Let's take a look at what this would look like with both a traditional IRA and a Roth. Using the same example, let's say you open an account with an IRA custodian and bought your $10,000 in ADA through that account over 2 years. Now I say over 2 years because you can only contribute $6,000 per year to these accounts. If your account follows traditional IRA rules, then the money you spent to buy your ADA may be tax deductible, meaning that's potentially 10 grand that you can just take off your tax report. Of course, confirm this with your CPA, and you can spend that money on crypto instead. Pretty cool. You will only pay tax once you sell at retirement, which can be a lower rate depending on your income at retirement. Or more simply, your account might follow Roth IRA rules in which your contributions are taxed upfront and not a tax write-off, but they are tax-free if you withdraw after the age of 59 and a half. Although it is worth noting that you can start withdrawing from the account at any time before age 59 and a half without taxes or other penalties, as long as you don't exceed the amount that you originally put in, since you already paid tax on that money. Profits, different story. Under Roth IRA rules, you would pay income tax on your original $10,000 before you put it in, but $0 on the $90,000 in gains. Huge savings. So you can see that this really adds up to a massive amount of savings if you plan on being a successful crypto investor. It's up to you if you plan on that. Now, like I mentioned, most Bitcoin or crypto IRAs are self-directed. Most banks and institutions actually don't want to accept crypto into traditional IRAs because of the fees that they earn on traditional investments, fees that they'd have to forego for alternative assets. Because of this, the industry for self-directed IRAs has developed substantially in recent years for the purpose of attracting crypto investors. Aside from the types of assets that you can acquire, there's a difference in how you manage your self-driven crypto account, so we need to briefly cover this as well. You need a custodian for your crypto IRA and the assets within the IRA. I'll recommend one in a second. A good custodian will help make sure that your assets are kept safe, and they'll also help to make sure that your account follows the ever-changing laws by the IRS. That way you don't have to read through any bill text. They'll do that all for you. If your main goal is to invest in crypto long-term, it's best to go with a crypto IRA service with low trading and membership fees. You always want to look. Now, I've looked into many of these services who do this, and it seems itust Capital is the easiest to use, and they have the most competitive fees. Other options include Directed IRA and Alta. But I actually liked itust so much that I reached out to them personally to be an affiliate. Here you can see that opening an account takes all of about a minute, and if you use my link in the description, you'll actually get $100 in free Bitcoin just for opening an account. The offer is limited though, so just make sure you grab it quick if you're interested. You can fund your account either with cash or a transfer from an existing Roth, whatever is applicable to you, and you can buy and sell directly on the platform with a variety of cryptos. Now, as always, we need to talk downsides and considerations. The first is capital losses. If your cryptos drop in value by the time you sell, your net loss can be used to deduct taxes that you owe for that year and subsequent years, depending on how big your loss is. However, if you're investing through an IRA, these losses are just gone. This means you can't tax loss harvest through one of these accounts. And we also need to talk about the 5-year rule. Generally, this means you can't withdraw profit from your account before you've held it for at least 5 years and before the age of 59 and a half years old. So if your crypto holdings within your IRA shoot up in price, and you want to cash out completely into your bank account, you can't do that unless you pay a 10% penalty, possibly on top of your regular income tax rates on your withdrawal. But don't confuse this with trading. If you buy a crypto in your Roth that explodes in growth and you just trade that to another crypto within your Roth, this is totally fine, and you will still save on your capital gains. There'll be no capital gains. You just can't pull those profits into your bank account without penalty. Now, I still think it's best to diversify your retirement accounts, as you don't want to bet your entire future on crypto alone. However, if you're a regular crypto trader or you'd like some crypto to be held very long-term with tax benefits, then a crypto Roth is an amazing option to help you beat the system. And again, if you'd like to go with a good service, I'll have one linked in the description below. And with that, I would like to thank you so much for watching, and I hope you have a profitable day.